Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to New York City and speak with Barry Silbert, founder of Second Market, an online marketplace for buying and selling illiquid assets such as restricted securities in public companies, and on which he recently launched the Bitcoin Investment Trust. Barry, welcome to the Keiser Report.
Thanks for having me, Max.
All right, Barry Silbert, tell us about the Bitcoin Investment Trust.
Well, I'm an early adopter of Bitcoin. I got involved a few years ago, and what most people realize very quickly is that it is very, very difficult to invest large dollar amounts in Bitcoin. You got to wire money to foreign exchanges. You got to deal with a very volatile market. And so what we did was we incubated a Bitcoin investment vehicle. And really what it is it's like a private Spider Gold GLD, where it essentially is raising money on Second Market and will trade on Second Market. And we handle all of the hard work of sourcing large amounts of Bitcoin. We handle the security, the safekeeping. It's audited by E&Y. And so the whole idea is to open up Bitcoin investing to a much broader group of investors.
All right, so basically it's like an exchange-traded fund, which is based on Bitcoin, but it's not exactly an exchange-traded fund because I believe it's only open to accredited investors, so you avoid that regulatory hurdle, correct?
Right. We were able to launch this in about 6 months. New ETFs could take years to get approved by the SEC. And at some point down the road, it might make sense for this to be in the public market, but for now, it's only open to sophisticated individuals and institutions.
All right, so as an asset class, and I remember when we were in New York recently, we were talking about this in your office, and we were discussing how hedge funds have got to look at Bitcoin as an asset class because if they don't, they might find themselves lagging their peers in 6 months or a year. So with the hedge funds coming into this, I want to ask you, since you've launched the Bitcoin Investment Trust, has it now become an instrument for this hedge fund community? Barry.
Not quite yet. We're seeing 3 big groups of investors right now. We're seeing tech entrepreneurs who are excited about Bitcoin as a technology. They can actually invest in the Bitcoin Investment Trust via their IRAs now, and so that's been exciting for that group of investors. The next group are family offices. So what's interesting is we're starting to see family offices who have a very diversified investment strategy, long-term time horizon, taking a piece of their gold allocation, putting it into Bitcoin. And then the third group, it's Wall Street professionals, portfolio managers, traders who are not yet investing for their clients or their LP money. They're investing personally. And I personally think that this is the precursor to the hedge fund money coming to the space.
All right, well, Barry, if that's so, and you've got these early adopters, very smart money coming into Bitcoin in a space which is now roughly, let's say, $6 billion in size, and the Winklevoss twins, who you also have a relationship with in terms of the local Bitcoin and Silicon Alley community. They're calling for this to possibly achieve market capitalization of $400 billion, which would make it on par with the largest of the stocks listed on the New York Stock Exchange, like an Exxon, for example. Is that kind of the, are you in the same camp? Do you think this is where we're going?
I think the outcome for Bitcoin is binary. It's a highly risky investment right now. It's either going to be total loss of your principal or a fantastic return. And actually on the website for the Bitcoin Investment Trust, it's bitcointrust.co, we actually outlined 4 different scenarios of upside for Bitcoin. If it was the size of Western Union, if it was the size of PayPal, if it was the size of the monetary base of Turkey, and then the biggest one is 5% of gold. And if you take 5% of gold, gold's about a $7 trillion asset class, we're talking about returns of certainly well in excess of anything else out there.
Yeah, you mentioned comparison to gold and silver, and this comes up often. People consider this to be really the digital version of gold, or for gold to be the analog version of Bitcoin. It's funny, Barry, I want to get your thought about this because a lot of folks in the gold and silver community, the libertarians, for example, they are slow to pick up on this thread. Where do you fall on this, Barry?
Gold has thousands of years of experience of being a known trusted store of value. That's never going to change. I do think Bitcoin is potentially for a younger generation, our generation's gold, because it does have the store of value characteristics and attributes, but it really is, from an intrinsic perspective, very valuable because this Bitcoin network, this transaction network, is going to change the way that people move money around the world. It's going to change the way that people think about money. And from that perspective, I think it actually actually has kind of the best of both worlds, both money and store of value.
All right, now, Barry Silbert, I saw a tweet this week, and it really sparked a thought in me. Somebody was talking about Bitcoin in terms of the Bitcoin race, and kind of making an analogy to going back to the 1960s. We had the space race, where Sputnik from Russia was out there, and then suddenly America entered the space race, and there was a scramble to get man in space. The reason I bring this up, and the reason this is interesting, is because only, from what I've seen recently, something like 2% of the total volume around the world is US-based. A lot of it's China-based, Russia-based. It's all outside of America. There is a bit of a Bitcoin race going on. On the regulatory front, it seems like the US, they're still kind of looking at this thing and trying to figure out what it is, but the rest of the world is already going full bore ahead. Your thoughts?
I think that's 100% accurate. As I mentioned before, I was one of the early adopters of Bitcoin. I'm a pretty active angel investor. I've invested in about 15 Bitcoin companies, and it's been interesting to see how the narrative has changed here in the US from 12 months ago to 6 months ago to today. 12 months ago, Bitcoin was described as the Silk Road currency. It was described as a tulip bubble, Ponzi scheme, and you had some early adopters using it, embracing it, but not many other individuals. Then about 6 months ago, the FinCEN Department of Treasury came out and said, you know what, Bitcoin, it's legal to use, it's legal to own, but if you're going to operate as a money transmitter, then you just need to register as such. And at that point in time is when I saw the narrative start changing from this is a really bad thing to this is something that could be good but could be bad. Today, I think it's changing. I think what's happening right now is the US policymakers and regulators are realizing that companies are going to get created, jobs are going to get created, and innovation is going to happen. And I think here in the US, we would love to see that happen here. And in fact, we'd love to see it here in New York.
Right, but clearly Bitcoin is a competitive threat to an entrenched oligopoly of big money center banks who love their huge fees. And if I can move money around the world, millions of dollars using Bitcoin for pennies per transaction, that's going to a huge body blow to these money center banks. So we understand they have a bias as to why they wouldn't want Bitcoin because it's a threat to their business. But nevertheless, I'm looking at statistics such as Bitcoin volume is now approaching daily volume of PayPal, and that Bitcoin volume is approaching something like 50% of the daily volume of money sent through Western Union. These are enormous numbers. Can you speak about this, Barry?
Well, yeah, I mean, clearly Bitcoin is very disruptive to a business like a Western Union or a PayPal. But trust me, the banks will figure out a way to make money off of Bitcoin. And in our conversations with all the banks, I think that there is enthusiasm about what this could do. There is certainly some concern about having to comply with rules and regulations around AML and KYC. But I think it's a global phenomena. And regardless of what the US or US banks think of Bitcoin, it's going to take off around the world, and I think ultimately the U.S. will fall behind if policymakers and regulators don't take a fairly kind of balanced, accommodative approach.
Now, Barry, Bitcoin has come around at an interesting time in history. It's come out at roughly the same time as the Edward Snowden NSA reveals, at the same time that Kim.com had a spectacular run-in with the copyright cartel, the MPAA, on his mansion in New Zealand. It's quite a spectacular story. And then Bitcoin. And all of these things have one common theme, that theme being encryption. Now, as you've stated, you're a long-time investor in the technology space. You follow it quite clearly. Can you talk a little bit about how encryption itself is defining this currency, why that's important, and maybe why we see echoes of it in other parts of the culture that might validate Bitcoin's existence, Barry?
I think the history of Bitcoin I would break into kind of 5 chapters, and I think we're in chapter number 3 right now. Chapter number 1 was early hackers, people playing around with the technology, didn't view Bitcoin as a currency or a transaction network. That was the first couple years. Chapter number 2 were early adopters, early entrepreneurs, angel investors like me who got involved and got excited about everything we've talked about, so the store of value, the encryption, the privacy, all of those things. The next group, which really started just this year, is the venture capital community. community who understands that the future of technology is going to be peer-to-peer. It's going to certainly rely upon encryption technologies. So we're in the middle of that VC chapter right now. The next chapter, which I think is 2014, is the Wall Street chapter. So this is when Wall Street starts investing money into Bitcoin and the Bitcoin infrastructure.
Are you also looking at a couple of these other alternative cryptocurrencies? The one name that pops up a lot now is Litecoin. What do you think, Barry?
I'm an investor in Ripple Labs, which is the company behind Ripple, but that's really more an investment in the founding team and the technology, less so the alternative currency. I'm personally not that excited about the alternative currencies because you have to remember Bitcoin at its core is software. It's a protocol. So any new advancement, any new tweak that other alternative currencies adopt, which gets traction, I think it's fair to say that Bitcoin can evolve over time to adopt that characteristic as well. So I'm personally not very bullish on alternative currencies right now, but it's still very, very early.
Yeah, I mean, you could imagine a scenario like the various fiat currencies today. Money flows in and out of these different currencies based on different macro events, and if there are 3 or 4 cryptocurrencies, you could see something similar happening. Finally, Barry Silbert of Second Market, I want to get your take on something. This is a bit more technical in nature, but you are a high-tech investor and somebody in Silicon Alley in New York, very well-respected, high-profile name. So let me get your take on this. Cody Wilson, who is, of course, the guy who brought us the 3D gun, has launched, along with his partner, the dark wallet, which they see as a conflict emerging between, let's say, one side are the validated coins. This is an attempt by folks like Matthew Mellon, another friend of the show, to come up with a technology to validate so-called validate coins versus going down a more anarchic path. We've only got about 30 seconds left, Barry. Do you have a thought on this?
Bitcoin will follow the way that US dollars are used. There will be a well-lit, well-regulated use, and there's going to be illicit private use. And I think ultimately both are appropriate, and it's not appropriate to try to shut down one, because I think Bitcoin at its core is an open protocol that anybody can use however they want to use it.
All right, fantastic. All right, Barry Silbert of Second Market, thanks so much for being on the Keiser Report.
Thanks for having me.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Barry Silbert of Second Market. If you'd like to get in touch with us, tweet us at Keiser Report. Until next time, Max Keiser saying bye, y'all.